Hi, my name is Nikki Matthews. I'm a California registered tax preparer with Smith, Marion & Company, and the subject today is, are Social Security benefits taxable? The short answer is that it depends. If Social Security benefits are your only income, they're not taxable, and you may not even have to file a tax return. If you do have other income in addition to Social Security, then part of your benefits may be taxable. To determine if some of your benefits are taxable, you'll need the following information. Form SSA 1099 from the Social Security Administration. You'll also need to gather all your other income such as wages, taxable interest and dividends, tax-exempt interest, taxable state tax refunds, alimony, business profit or loss, capital gains or loss, taxable IRAs and pensions, rental income or loss, unemployment compensation benefits, and any other income. First, from Form SSA 1099, look up the amount of your benefits in Box 5. For this example, we're showing $10,000 of net benefits in Box 5. Divide those benefits in half. In this case, half of $10,000 is $5,000. Add all your other income. We'll suppose that in this case it's $30,000. Together, the $5,000 and $30,000 is your combined income of $35,000. And a note that a lot of people ask about. If you're married and filing a joint return, you and your spouse must combine both your incomes and both your Social Security benefits, even if only one of you has income or only one of you has Social Security benefits. So as an example for how this will work for a single taxpayer, you would gather your Form SSA 1099 and look in Box 5. The previous screen showed $10,000. Half of those benefits is $5,000. And all of your other income is $30,000. Together, your combined income is $35,000. There is a filing status base amount chart. From that chart, find your status. In this case, a single taxpayer has a base amount of $25,000. From the combined income of $35,000, you would subtract $25,000, which again is the base amount for your filing status. The remainder is $10,000, and that amount is the amount that may be taxable. If you are a married filing joint taxpayer, you would use a different base amount for your filing status. The base amount in this case for a married filing joint taxpayer is $32,000. Let's assume that Box 5 benefits are $20,000. Half of those Box 5 benefits are $10,000. Let's also assume all your other income is $60,000. Together, the combined income of half your benefits and your other income is $70,000. The base amount for your filing status is $32,000 from the chart below. In this case, the combined income of $70,000 is more than the $32,000 base amount, so some of the Social Security benefits may be taxable. Let's look at an example for a head of household taxpayer. On the chart below, a head of household taxpayer uses the same base amount as a single taxpayer. Let's assume that the Box 5 benefits are $16,000. Half of those benefits are $8,000. All your other income, we'll assume in this case, is $5,000. Together, half your benefits plus all your other income is a combined income of $13,000. The head of household base amount for your filing status is $25,000. In this example, the combined income of $13,000 is less than the $25,000 base amount, so none of the Social Security benefits are taxable. An example for a married filing separate taxpayer who lives with the spouse is unique because the base amount for a married filing separate taxpayer who lived with the spouse at any time during the year is $0. Even if you have a very low income, let's say in this example, half your benefits are $6,000, all your other income is $1,000, your combined income is $7,000. If you are married filing separate and living with your spouse at any time during the year, 85% of the Social Security benefits are taxable. We've been talking about how much of your benefits may be taxable, but how do you determine how much is taxable? Let's assume Box 5 benefits were $10,000. Divide that in half to get $5,000 and add all your other income. Let's say $30,000. Your combined income is $35,000. Subtract the base amount for your filing status, in this case single, so minus $25,000 leaves $10,000. Subtract another $9,000, $12,000 if married filing jointly, equals $1,000. Enter the smaller combined income, divide in half. Well, you get the idea. This really is why you want your accountant to figure out how much is taxable. Some key points to remember for non-taxed Social Security benefits. Remember that an individual with only Social Security benefits or with combined income less than $25,000 from the chart below will not have to pay tax on their Social Security benefits. And couples married filing jointly with only Social Security benefits or with combined income less than $32,000 from the chart below will not have to pay tax on their Social Security benefits. And most states, including California, do not tax Social Security benefits at all. Some key points for taxed Social Security benefits. Individuals with combined income between $25,000 and $34,000 may have to pay income tax on up to 50% of their benefits. And individuals with combined income over $34,000 may have to pay income tax on up to 85% of their benefits. Couples filing a joint return with combined income between $32,000 and $44,000 may have to pay income tax on up to 50% of their benefits. And couples filing a joint return with combined income more than $44,000 may have to pay income tax on up to 85% of their benefits. But no one pays federal income tax on more than 85% of Social Security benefits. Remember the importance of a tax advisor. Talk to your tax advisor before year-end to determine whether your Social Security benefits are taxable and ways to minimize the tax bite. Also, if you do have to pay tax on your Social Security benefits, you can make quarterly estimated payments or have federal taxes withheld directly from your benefits using Form W-4V, Voluntary Withholding Request. Thank you for listening.